Started. So thank you for joining here, wherever you are in the world. And I want to kick off things by just communicating a little bit about why we started Latitude. Part of the mission was to give back to Latin America and just the community at large, because, you know, I was benefited a lot from other people supporting me on my journey. And so it's a driving kind of motivator for me personally and for the entire team at Latitude who feels kind of connected with that mission. So I want to answer a few general questions that any founders might have, especially in those early days. And then just as a quick kind of, caveat here is a lot of you have applied for LF5 or Latitude Fellowship 5, the 5th cohort. So those applications are open. So if you're building a startup in Latam, go to latitude.com and find out more about our fellowship programs and how to apply. And the sooner you apply, the better, because a lot of spots filled up. We have a huge backlog of people. So, and then on a separate note, we also launched an angel fellowship. So if you kind of think about what we're building, you've got all these great founders, and then you've got all these, companies being built. And then the other side of the marketplace, we've got potential angel investors that can also help invest and advise and support the next generation of founders. So that is something that's in evolution. We've got kind of our private pilot happening right now. So I guess I'll just start off by sharing a little bit about my experience as a first-time founder and what that was like, and how different it is when you're starting a company later on in your journey. But I mean, I guess the lonely journey of starting something, regardless of where you are, even if you're just starting or you're in the middle of building your company, it's kind of a lonely experience because, you're dealing with all these struggles. You've got, challenge with people. People's a big part of startups. You've got money problems, right? That's every startup that's looking to grow needs to, find resources, whether it's from your customer base that you're building, or a venture capitalist, or angel. And so, that's there's a handful of many things that that you face. Part of the motivation is the importance of building relationships. We were just on before this a session with all these great founders that have scaled massive companies, and some of them have built billion-dollar businesses, and they were all connecting with each other. And it's crazy to see that even when you're a massive company, you still feel like you benefit from the journey of others, or the perspective, or maybe just having someone to listen to you as you kind of solve your own problems. So that's kind of what we're doing with the Latitude Fellowship. And so some of the things we'll do is open up sessions like this and kind of share our experience. So we set up Lightbeam, where you can ask your questions. I'm not sure if we're going to use Lightbeam as questions. We may just pop them in here. But, I'll invite a few Latituders to join also, maybe, and kind of is Matilda happen to be on? I guess she's not on. I see Alex. Okay, Alex was part of one of the Latitude cohorts. Good to see you there, man. How are you? If we can how you doing, man?
Hey, Brian. Good. How are you? Just excited to be back in New York, finally.
Awesome.
All good.
Cool, man. Yeah, I mean, maybe you're pretty active in the community. Which cohort were you part of? 3?
Yeah.
So maybe you could share briefly about how you kind of, Matilda's going to join us in a second, but a little bit more about kind of how you, interacted with people and the importance of community kind of as you're building your company.
Yeah. So community is a big part of our company, and we're always trying to learn with the best minds out there. So my co-founder and I really devoted a lot of time to try and get as much as we could from Latitude. And that's a tip I normally give to incoming new Latitude fellows is, if you have co-founders, be able to have someone kind of taking the reins inside the company and making sure the boat is still afloat and moving in the right direction. So that's what my co-founder did, and I devoted a lot of time to really networking with other Latam founders, and developing these relationships, because it's very time consuming, but at the same time, I think this is one of the unique experiences where you truly get out what you put in. And I think the number one thing that we have scarce today is our time, So definitely, if you're here, congratulations, and it's definitely the place to be.
Awesome, man. Yeah, cool. Matilda, if you want to jump in too, I see you there. You were in our last cohort, LF4, and you were someone super active in the community. Are you there?
Yes, I'm here, Brian. Hi, Brian. Hi, everyone.
Hey, how are things going?
Great, great. All
So
good.
you asked a lot of questions in the last during the sessions. What's the hardest question that you got an answer to during the fellowship that kind of helped you navigate your situation as a founder?
Well, there were many, including one when I asked you what was the most difficult part of being a founder, but there might be some similar questions from the guys here today. So I'll leave that one for them to ask, because Brian has got some really nice insights on the harder sides of being a founder. And then another one that I had was like how to deal when you're like an early stage startup, early stage founder, with VC rejection and with negative feedback on your company, on your product. And I think the first thing I learned from that was, first of all, to take the word rejection out of our vocabulary. Like, you did not get rejected, they missed out on an opportunity. And I think you would be amazed to see how things change when you actually change your mentality and start seeing things that way. And also to remember that many potential investors that you will speak to do not have the expertise that you have in what you're building, and they don't know the product as well as you do. So yeah, take the advice. Some will be good. You can leave some of it, but don't question everything or change your product every time someone tells you that it's not good enough or it should be different. Because to me, like, I think you might end up going around in circles trying to please potential investors rather than focusing on what really matters, which is your customer and what they really need. So yeah, I think that was one of the tough questions.
No, that's great. I mean, that mentality shift just like has a massive difference, because like every founder, you're faced with no's. Like, in my journey, I think I had over 30 investors tell me no. And the reality is you shouldn't be looking from validation just from investors. I mean, it's great if there's interest from investors, that's fantastic. But the real validation you're looking for is the customer feedback. And then that will probably bring investor validation as you are able to kind of show that what you're building is super useful and valuable to the market. So any other tips for anyone else, any other founders watching, about the journey or about the Latitude experience, or anything else that you think would be useful for people listening?
Well, I think like my first piece of advice would be, if you haven't done it yet, apply to Latitude. Like, I swear you won't regret it. The sessions, the mentors, the Latitude team that are hands-on and that help you all along the way and even after the program is over. And above all, the community that's incredible. And I can assure you, I'm not getting paid to say this, like, this fellowship has really been game-changing for me, and I've grown so much professionally, but also personally during this whole process. And the second piece of advice I would give is, to anyone out there, don't be scared of raising your hand or be ashamed of asking for help, asking questions. There are no stupid questions. And this is something I realized being part of Latitude, like making the most of your contacts, of your networks, of communities like this, because like there's a big chance that you will find people that have been through the same challenges that you are facing today, and they can help you solve these issues and prevent you from making the same mistakes that they made. And I've been amazed during Latitude to see how many people stepped in to help me on questionings I had, on issues I had with my startup. And it's helped me a lot. And it's also saved me a lot of time of trying to figure it all out by myself. So I would say, make the most of it. Don't be ashamed of not knowing or failing, because I reckon that by sharing your experience with others, you'll only grow better and faster.
Oh, that's great advice. I think that, yeah, being able to kind of, ask those questions and not being afraid to ask questions. I mean, everyone's in the process of figuring things out. And I think it's great to find people that maybe are 1 or 2 steps ahead of you in the journey too, right? Because, you could probably learn a lot from like big CEOs of large tech companies, but the reality is someone that, if you're raising a seed round, someone that just did that, or you're hiring your first, tech team, initial tech team, gauging, kind of what worked for other people that are just like 1 or 2 steps ahead I think is a really valuable place to be. So thank you for joining. You were a great contributor last cohort. I feel like we totally enjoyed all of the, the energy you brought, and you were super active, and that, I think you, as Alex said, you get what you put into it, you get what you put into it. And I think that you are a prime example of someone that put a lot into it. And hopefully it sounds like you got a lot out of it too.
Definitely. Thanks for the invitation, Brian.
Awesome. Let's go on to some of the questions here. It looks like we've got around 85 people on the LinkedIn Live, and we've got some other people on Zoom. So yeah, if there's any questions that we want to pop in here. Team, do we have the light beam, or do we have another place for questions that have, I saw a couple questions circulating. Someone could come in and help out on on the founder journey stuff. Light beam, okay,
yes.
Cool. Can you pop the questions in light beam here? All right, so I can click on it. Thank you. Cool. Let's go through some of these questions, and we'll just go rapid fire here. Cool. Would you advise founders to raise capital only with an idea if they're committed to going full time? It's a great question. First of all, it's okay to work part-time on something in the early days and just kind of like hack your way to it on the weekends. Like, that's normal. I think that's part of the journey. And, it's impractical for every single person. Maybe you have a family, maybe you have other, financial kind of responsibilities for you just to like quit your job and start a company. So first of all, that's pretty normal. I think that the likelihood of you raising venture or institutional capital is very low if you're part-time. It just will not. It will not be something that investors are interested usually, because they're looking for kind of full commitment. You could, if you're able to get some traction without being full-time on things, maybe stringing together a few angel investors to kind of enable you to make the jump. So yeah, that's kind of my 2 cents on that. Is I would. If you're going to go the venture route and you want to raise institutional money, in the words of Hernan Cazá from Mercado Libre from my podcast, he said, we don't invest in part-time founders. So quoting him. So that's just, that's just something to think about. But doesn't mean that you can't be part-time as you get kind of momentum for your startup. Momentum begets momentum. And so maybe you'll have enough momentum where you can just, go full-time and be focused. Awesome. Alex, do you want to ask your question? I see you have a question here that got upvoted a lot.
Sure. Thanks. Yeah, Brian. So we live in a world where most companies are now being created in a remote first environment. So how can we as founders embrace, a strong ownership culture without giving the impression that we're micromanaging our team members? And how would you go about this kind of dilemma of when to delegate versus knowing when to step in?
Yeah, this is a good question. And I don't know if I'm a super expert on remote work. I'm like you, figuring it out. And so, we're building a remote first environment at Latitude. And so we're still figuring out. One thing that I'm prioritizing massively is the get-togethers in person. So we're going to be all meeting in Brazil next month. We're flying the whole team from everywhere, and we're going to spend time physically together, because I think that is important. If you look at the foundation of any great team, the bottom line is you build a bunch of trust. Trust is the base layer for enabling you to have a solid foundation. When you have trust, you can enter into conflict. Conflict is kind of the second layer, and you need conflict in an organization because you need people to challenge other people. Otherwise, you just have a weak organization that's not really pushing the boundaries of things. But in order for you to have conflict and make that okay in an organization, you need to invest in the base layer of trust. After you have the ability to have conflict, then you start making commitments to each other. And that enables you to have accountability because you're making commitments, and then you don't need to worry about micromanaging because you've all made commitments to each other. And so only then you get results. So I would actually take a step back from everything and really just focus on making sure you built enough trust with your team. And that's with your team, and then your team also connecting. In all transparency, like Latitude started a year ago. I haven't met a lot of people on the team in person. we're overdue. We need to spend some time. We need to have, a cafezinho or a cafe and a beer or whatever, and establish that trust layer. So I think beyond that, there is a little bit of, in the early days of a startup, you're working on the vision of the founders. And so it's unrealistic for you to like think that in the beginning of the company, you're going to empower the whole company to figure out, because it comes from the founder's vision of what you're building, right? So, it's not micromanaging when you're kind of like laying out the vision. What becomes micromanaging is if you're hiring a bunch of people and then you're telling them how they should be doing things. That would be something that you would probably want to avoid, because the purpose of hiring smart people is so they figure out how to do it. So you're strong on the vision, and then you're loosely held convictions about maybe how to get there, and that's where you're involving the team. And that's a quote from my co-founder Yuri that said that to me in the early days. He said, we have big vision and clear, strong vision, but we have loosely held ideals on how we're going to get there, because that's what we all need to figure out together. So that's my 2 cents on micromanagement and remote work. So thank you for your question. Matthias, I don't know if this came from LinkedIn, or from if you're on the Zoom, you can pop in and say something. If not, I'll just read your question. Okay, I guess you're on I'll read your question. When should you consider leaving your job to go full-time on your startup if you don't have a tech co-founder? I think that, you don't have to have a tech co-founder to start a company, right? Is it better? Is it easier in some ways? Yes. But my first company, or my last company that I built, my co-founder and I were not technical co-founders. We didn't wait to start the company because we needed this technical person. But yeah, I mean, if you're going to probably reduce friction if you find someone that's, I swore to myself I wouldn't do it again. That's why Yuri and I partnered up with Gina to make sure that we have somebody that can cover our, on the tech side. So my advice would be, it's more of a question, less of like the tech person and more of, are you in the right moment to start a company? Can you deal with like reduced income for a while? If you're bootstrapping initially, can you kind of, what's your personal burn rate? Those are all questions that I would kind of be thinking about, less so on the tech co-founder side. That's my 2 cents. Next one, Vanderlei. How's it going, Vanderlei? I don't know if you're on here. I'm just going to read your questions. It seems to be the best way to do it. Would it be feasible to develop an MVP of an app, deploy it, and get user feedback, and only after go find investors, and still being a single person company get investors interested? Totally possible. I mean, I think that, I'm not an expert in lean startup, but I mean, if you look at kind of, the best practices, I think that there's a lot of, customer interviews. If I think about my journey in the early days, the concept of just like testing, launching something, validating it, getting customer feedback just wasn't common practice. But nowadays it is. So if you can get early traction, incredibly good feedback, from users that show there's a strong demand for your product, that will definitely be, particularly if you're a first-time founder. If you're a second-time founder and you can lean on your reputation, or if you were an early, kind of, employee or partner of a fast-growing tech company like, Loft or Quinto Andar or Nubank or whatever, or Bitso, then you're probably going to have an individual brand that's going to maybe allow someone to stake, either an angel or a venture fund, kind of stake your credibility. But that's not the case for most people. And so hacking together an MVP and getting customer feedback is absolutely the way to go, because that'll give you confidence to like spend more time on it, and it'll also validate the potential of an investor writing a check into your business. Next question, FCZ. I don't know who you are, but FCZ, I'll read your question. Given the excess liquidity in the market, would you recommend for tech startups to raise pre-seed funding only with an idea, a concept, and a business plan, or try and raise seed Series A funding after launching the initial MVP and getting initial feedback from potential customers and early adopters? It's a good question. I think that the boring answer is it depends, and I'll tell you what it depends on. If you have a high, kind of high cost business that requires a lot of capital, then obviously you need to raise money, right? But if you're dealing with like a asset light business that doesn't require massive amounts of capital, like a software as a service business that's solving some specific problem, maybe you're building a software as a service business for funeral homes to manage, their customers. I'm just making shit up here. Crazy, silly idea, but that may require a lot less, maybe a less capital intensive business, and you can develop, maybe you have one potential customer and you build that solution for that customer. Maybe you can get them to pay them to build the MVP, and you can build a scalable modularized business where you can kind of take that, copy and paste it, and then build it into a software as a service business. So the answer is it depends. If you're building a business that is gonna, buy and sell real estate, the likelihood of you needing to raise a ton of capital from the very beginning is much greater. So I think it depends on how capital intensive your business is. But that's something that, is a case by case, but nothing wrong with raising a little bit of money if you can, based on an idea. But also don't let that stop you from building your business. I hear founders are like, oh, I can't raise money, so I'm just not going to start a business. It's, it's just not that's not the case. And my company, I couldn't raise money for 2 years. I struggled. I was flailing around like like I was just lost at sea. And finally I found a little, reservoir of water on an island, and it started working. So it's just a grind, and you gotta just be, action driven. What are the biggest mistakes you see when founders are starting out? I think one of the biggest mistakes is falling in love with an idea and not getting customer feedback from the idea. Like a lot of founders think that they're like, I know what the business is. I've got to figure it out. I think that's just the number one mistake that I see most of the time. Other mistakes that I see, I think like focus is another one. And I personally suffer from that. I want to boil the ocean. There's so many ideas I have. So deciding what you're not going to do is another one. And getting initial traction and then kind of tangentially expanding the business. That's something that, it's advice that I give and sometimes don't practice. Let's see, lots of other mistakes, but one of my biggest mistakes was setting up the wrong corporate structure. That's you want to listen to a podcast with Dan Green, we talk about that a little bit on the Latitude podcast. So yeah, those are a few mistakes. All right. 1 year helping hundreds of startups from Latam. What did you learn? Good question. Yeah, I think that first of all, I've learned that the spirit of collective support and willingness to help other people is deeply, deeply embedded in people in Latin America. And that is super exciting to me because it's, and if you think about it from a cultural standpoint, like the US is like this very like individualistic society where people are just kind of like, I remember I'd get together with my wife's family and I would, sometimes I would just break off and be like, do my own thing. And they'd be like, is something wrong with Brian? Is he mad? Or like, it's like, no, I just want to have my own space. And I like split off. And that's kind of part of the culture in the US. And if you look at Latin America, what I've seen in 1 year that is totally proven is that people like Matilde, people like Alex, people like that have gone through our fellowship, they have like a deep spirit of wanting to help other people. And here's the secret. And I will quote LF, I think it's LF2 or LF1, I think it's LF1, Andres from Osana, which has gone on to raise money from Andreessen after our program and is an incredible entrepreneur. And I talked with him today, and he said something that really caught my attention. He said, people underestimate the value of helping someone else because you actually get to learn all these amazing things while you're like giving feedback and you're getting to listen to somebody and like they're reflecting on their problems. And oftentimes those problems are similar problems to you're facing. So I think that those are a few things that I've learned that I think are very motivating to me and make me extremely optimistic about Latitude and also about the future of Latin America. What is Latitude looking for in founders that aspire to become members, passion, driven, ability to execute. Luis, I think all of the above. You know, I think that having demonstrated the ability to kind of like make things happen, whether that was your time working at, Confio in Mexico, or, a top tech company, or, I mean, if someone came to me and they're like, listen, I am also like an exceptional triathlete, like that shows that you've never like have a focus on something, have a goal, make it happen. If you can point to something that you've done that's been impressive, it doesn't have to be building a company, because when I started, I hadn't built anything, and so we don't discount that. But you need to kind of, passion is great, but like vision, passion, proof that you've been able to like build something of value, whether that's for someone else in a different organization. Maybe you were just like, maybe you were able to get into a top university globally, or there's people that have been at Latitude that have like applied to Stanford, got into Stanford, and then they waited for, they postponed their acceptance because they want to focus on their startup. So I wouldn't say there's any one individual thing, but we look for people that, a combination of profiles, strong tech folks. So like, we think that technical founders and technical potential entrepreneurs are going to be building, play a big role in building companies. People that have experience in product and growth is another characteristic and quality that we look for, because if you're able to take, VTEX's product and, help grow it and expand it across, multiple geographies, or, in multiple markets or in different sectors, probably demonstrates your ability to kind of take a product and start a company. So we look for qualities, other signals. If you have deep expertise in a specific sector, let's say that you work for several years in Germany, in the solar panel business, and you deeply understand that, and you have a competitive advantage understanding that industry better than anyone else. These are all qualities and characteristics that we look for at Latitude, for people that we admit. And then also, lastly, super important, and Alex will get mad if I don't point it out because he called me out one time, we look for a mentality of people that give back and want to elevate other people and support other people. So one time I spoke, and he pinged me, he said, Brian, you didn't mention this about what you look for. And he was totally right. So I have to give him the props for, in planning that, because it's something that we totally look for, and, is absolutely critical, particularly to build like a healthy community and ecosystem, right? Awesome. Which is the best way to contribute with the Latitude community? So I'm assuming you're asking this from the standpoint of someone that's not in the community. I think if you're in the community, you probably know that what being a good community member means. If you're not in the community, I'd say that one, join the community is a great way to actively, help and support. If you are, executing in an operating role in a successful tech company, and you want to be a mentor, you can apply to become a mentor. If you're watching this and you've, scaled, a bunch of users on a platform, and you've got some expertise in design because you helped build the early wireframes at Quinto Andar or whatever, you're probably the type of quality person that we think could be a great contributor to the community. And so you can apply at mentors.latitude.com and tell us why you're awesome and why you want to help us build this amazing community. Okay, Pedro, how you doing, Pedro? Pedro Pini, thank you for your question. Most VCs affirm that the team is the key factor when deciding to invest in a startup. Could you please deep dive into which features, experiences you are looking for in them? So as a quick clarifying question, despite being someone that's done a lot of investing, I'm not a daytime investor. It's not my job. My job is to try to build Latitude in the most amazing community where we reduce friction for early stage founders and build this kind of operating system or infrastructure that makes Latam fly to the next level, okay? So that's my role. So I'll give you my perception of a founder, or potentially someone that's done some angel investing, and maybe the perspective of like Tommy, from Latitude, who does do some investing as part of like a separate fund that we manage. I would say the number one quality that I look for is inevitability. So what does inevitability look like? I'm going to tell you a few stories of inevitable founders. I can think of a bunch, and so I'm not picking and choosing. I'll just tell you about something that I demonstrated as inevitability when I was starting. When I was in the early days at building Viva Real, I remember I was trying to get this one person involved. His name was Simon Baker. Simon was the CEO of a large real estate marketplace business in Australia. He'd scaled the company. They were a publicly listed company, $1 billion business, and he was part of that whole story. He had left the company, and I was trying to get him to come to Brazil. I was trying to get him to invest, and I basically communicated with him for over like 2 years, and he didn't end up investing for a while. Finally, I just said, hey, Simon, I want you to fly to Brazil. I will hire you to become an advisor and consult with us in our business. So he wasn't really a professional investor at the time. We ended up hiring him. He shows up to Brazil. 5 days before he arrives, I basically looked at my other co-founder, Diego Thomas, and I said, how are we going to pay this guy as a consultant? We don't have any money. We're like broke founders sleeping in the living room of this little 1-bedroom apartment. And then I had the idea of like, let's invite Simon to speak at an event and we'll charge to hear him speak. So we got super scrappy. We invited 100 customers, potential customers, real estate brokers. And then we had Simon show up and we said, your job is to entertain these people and talk about the future of real estate tech. And he did a great job speaking. People paid to go to the event. We made like $7,000. We turned around and pay him $5,000. We pocketed $2,000. And then we got 50 new customers. And when Simon Baker saw this, he said, holy shit, sorry for my language. These guys are scrappy. They're just like, they're inevitable. And so that was 2 years after I tried to get him to invest. He wired $100,000 kind of the next week, and then ended up investing another couple $100,000 soon after. And it was just a moment of like just demonstrating that you're unstoppable. And so that's an example of what I would look for. So it's not about like specific qualities or like, you're super smart or whatever. It's all those things are great and necessary, but you need to also just show incredible hustle, inevitability, and be able to point back to all the things you've been able to do that look like they were impossible and now they're possible because of you. Where do you see the Latam PropTech industry in the next 3 to 5 years? Where market and regions do you see the greatest opportunities? I think that we're working on right now a report on the PropTech space. So I won't share any spoilers. It'll come out in the first quarter of next year. I'm very bullish on PropTech. I think that the direction of PropTech is very clear. There's a convergence of, this whole verticalization of real estate and, full stack approach. And so I do think that there's definitely challenges in PropTech. It's an enormous universe. You have everything from, the houses of the world, and in casas that are in the for sale transaction business. La house being the new sales, and casa being the resale market. The lofts that are doing pretty much a little bit of everything with financing. You have the quintos that have dominated the rental. So I think that there's this verticalization, and there will be some consolidation in my mind. I think that it's you're either at the table or you're on the menu, and so we'll see continued innovation there and probably some consolidation over time. But largest asset class in the world, so I'm bullish that, and it's a crappy and low NPS business that is slow and inefficient. So bullish on, and I'm involved in probably 10 or 15 PropTech companies in some capacity. So thank you, Eduardo. Next question. What do you think is going to be the future of B2B business between suppliers and independent stores? Would you help or invest in companies in this sector additional to cheaper? That is a question for Tommy. So I would suggest apply to the fellowship, connect with other people. I think there's a massive opportunity in B2B between suppliers and independent stores. I know there's Klubi, there's Cheaper, there's Amelios in Mexico. They're just starting. There's a handful of companies. So I think it's a big opportunity, and I don't think it's a winner takes all. I think that there'll be a handful of different companies that create efficiencies between the supply chains and independent stores. So, but apply to the fellowship, and then maybe we can connect in a little more detail. All right, why Latam? And what do you think is the main difference of working with Latam entrepreneurs, Daniel Marquez? Why Latam is really, the personal question is, I lived in Latin America for 15 years, right? So for me, there's a sense of responsibility. I think my co-founders would agree. It's a region of the world that, as my co-founder Gina says, it's the largest latitude. So, it's a little bit behind the name, with an incredible amount of talent. And if you look at the overall development of the ecosystem and kind of maturity of the ecosystem, it's still very early. The amount of venture capital that's gone into, the region is, it's a massively disproportionate when you compare it with the volume of opportunities. And so I think that, there's a bunch of existing companies that, I don't think take great care of their teams. And when I say that, I'm thinking of the oligarchs that, haven't had the competition that, you see in other markets. So that ends up resulting in kind of not great working conditions. You could say that some of the labor conditions are, abusive in some respects. So I think tech will blow that wide open. Why else? I love Latin America. I love from Mexico to Argentina and everywhere in between. Spent time in Mexico, Colombia, Brazil, Argentina. Have traveled to almost every country in Latin America. So that's something that I have a personal connection to. But besides thinking there's an amazing opportunity with amazing talent, I think it's my way to also give back and elevate the region. All right, more questions. Okay. How do you deal with the troublesome co-founders who are not contributing to the team, but have been from the beginning? Hard question. I've done a lot of co-founder coaching on this, and co-founder conflicts are real. I talk about it in my book in either chapter 2 or 3, I don't remember, but so I would go read my book if that's the case. Someone want to drop it in the chat if you haven't read the book yet. Viva the Entrepreneur. I talk about the co-founder dynamic and kind of team dynamic. I would say that I can't give you advice on your specific case because I don't know all the details. But if there's an irreconcilable difference that you cannot solve, you obviously have to think about how to go separate ways. But I would invest in some founder therapy. I've talked to, I won't name names, but early co-founders that were in Latitude that were not seeing eye to eye, were fighting, and I helped a handful of ones that ended up raising. One of them just raised like a $6 million round recently, and now they're working together. So I think that first invest in the relationship. If you think it's a skill problem and an imbalance, then you need to kind of be honest with yourself and probably better to address it early rather than later. So don't sweep it under the rug and have those hard discussions before it's harder later. It's kind of like a marriage that doesn't have kids yet. Like it's probably easier to part ways if you haven't built a big family, and that's going to complicate your separation. So that's my 2 cents. Hard one though. How do we connect with other entrepreneurs to get access to networks of entrepreneurs if it is not through a fellowship and incubator? It's a good question. I'm trying to think how I did this before Latitude. You got to find your tribe, find your community. There's plenty of other entrepreneurs out there that are, I would just say, first of all, make a list of everyone that you know and respect and admire and think that has an interesting network. And just make a target list of people, and one way to do this is go create value for 5 other people. Just create value for them. Literally find 5 people and work your ass off to figure out how you can help them. What is it that or see or can do for other people that will build value for them? That's really how I got started at Latitude. I just started helping people. And then people were like, oh, that's really cool. Like, thank you for helping me. Like, how can I help you? And so it's kind of the thank you economy, right? It's like, thank you for your help. What can I do to contribute to your success? So my advice would be make a list of the people that you think that can be helpful, that can be helpful to you and go build massive value for them. The rest will take care of itself. What can we do in Latam to increase the diversity of founders? I see a lot of privilege in what earns people the chance or risk to start a company. Somehow I feel like we could do a lot more to incentivize diverse talent and break down barriers. What are your thoughts on this? Carlos, great question. We care a lot about this at Latitude. And so, you know, one of the things that we've done, just as an example, in our last cohort, LF4, that Matilda was part of, we actually decided to open it up to women. And of course, like, women is one aspect of diversity. There's, you know, numerous other types of diversity across the board. I think the first thing we need to do is start by, like, you know, like at Latitude, we decided just like, let's focus on women this cohort. And, you know, we'll expand that in other cohorts and have other initiatives. So I think with any, like, I'm channeling my mom right now. My mom is like a social worker, did like all this stuff to help people. And she was just like super focused on like her community and helping people that lived in the area where we lived. And so I think that the starting point is, how can we like just make those first steps? And talking about it is a great first step, right? Not enough, and it's not, we can't stop there, because otherwise we'll just be talking about it till we're blue in the face, and that's not what we want. So I think that I can tell you more initiatives that we think about in terms of, you know, in increasing diversity. You know, I would like to see the next generation of emerging managers have some diversity, emerging fund managers. So we have some ideas on how we could potentially affect that. But I think ultimately we need to, like, the kind of today's leaders need to be empowered to kind of help the next generation. And I see guys like Ben Gleason, who, you know, started Guiabolso, and he's like, I make a huge declaration that I'm just going to make this important to me. And you know, we had Sahil Lavinga, who is the founder of Gumroad, on a closed session with angel investors. And during the whole George Floyd situation in the US, he just went on Twitter, and you know, he's got 250,000 followers or however many on Twitter. He said, the next investments I will make will be in Black founders. He just said that. He got 250 inbound contacts. He invested in 4 founders, and amazing investments that he was able to source. So last thing I'll say is, it should be part of a strategy. This is not charity work. Investing in diverse founders, you know, it should be part of your strategy, or anyone's strategy, because it's an opportunity. So it's not charity work. So anyways, that's a couple quick thoughts on diversity. But we're super focused on that at Latitude, and it's something we deeply care about. So come join us and help us make it happen. How have the entrepreneurs in Latin America, how have they changed from the time when you got in Latin America until now? Andres, I see you there. How's it going? Thank you for the question, man. I think there's a couple things that have changed. First of all, I think the barriers to what is possible have been, I wouldn't say lifted, but have been loosened from the shoulders that all the weight that everyone's carrying on how to build a company. So now it's possible in the mind. I think there was almost like a mental barrier for a lot of people, like, oh, it's hard to build a huge company. You know, there isn't enough examples. So I think that the confidence and belief in, you know, in entrepreneurs, in themselves, in what's possible is a dramatic shift. And that's actually, to me, is like, when I went to China 6 years ago with Monashees, I remember just seeing these entrepreneurs, and I'm like, these entrepreneurs are thinking super big, and they're like not limiting the size of their dreams and what they're capable of. And I think that we've seen a breakthrough in the last kind of 3 or 4 years. So that's something that's really helpful. I also think that, you know, there's definitely more infrastructure and support and more angel investors and all these other things. But I think the mentality has shifted, is probably the biggest one. Then besides the mentality, connected with that, the talent is way better. Andres, if I take the vintage of founders when I started, a bunch of country bumpkins, man. Like, you know, I'm joking, but like, the level of sophistication of entrepreneurs now that are like, oh, I have to do a cohort analysis. What's a cohort analysis? Oh, it's this leaky bucket, like, you know, NPS from day one, measuring, you know, analytics, like, you know, how to, you know, kind of how to raise capital, how to like the level of sophistication is much greater today. And I think that's thanks to the internet, thanks to some success cases, and thanks to some people reaching back to kind of elevate the next generation. And that's kind of at the heart of what we're doing at Latitude. What is the range of financial resources you are willing to invest? Meaning, I think the question is, how much am I willing to invest? Again, I'm not like focused on investing today. I don't know if I understand the question 100%, Robson. But in terms of our fund, Tommy usually invests like 25 to 250K in companies. So that's on the fund side. But yeah, I think I understood. That's understood the question. Do you recommend to incorporate the company outside LATAM or go to a corporation inside the US, UK, Bahamas related? I have a pretty strong opinion about this. I'm not a lawyer, but I've written about this, and I've held podcasts about this topic. For majority of cases in Latin America, the ideal structure, if you're selling into Latin America and your customer base is in Latin America, the ideal structure in a majority of the cases is a Cayman Islands holding company, not Bahamas. In some cases, maybe it'd be like 90% Cayman or like 80% Cayman, 10% US and 10% UK. Companies like Pomelo, that was from LF2, that's raised about $45 million in venture. They were born in Latitude. They have a UK holding company, and I think that's partially for some fintechs, and they had a UK lead investor or co-lead investor. Actually, Monashis led, and then Index was brought on to co-lead. And so Index is based in London, so they may have wanted a UK structure, but 90% of the cases you'll probably want a Cayman. In some cases that are selling into the US, you can play with a Delaware C Corp, and there's other structures. But my advice is don't go cheap on a lawyer. We paid $100 million in capital gains taxes when we sold our company because I went cheap on the lawyer in the beginning, and I didn't have all my ducks in a row. So don't go cheap on that. And you can listen to the episode with Dan Green on our podcast. Just Google Dan Green Latitude podcast, and it should come up. A lot of questions. Okay. I guess I'll keep going. I still see about 80% of the people still here. So apparently this is interesting. What's the biggest challenge with consumer adoption of technology in Latin America? If the technology is not there yet to enable our startup solution, should we target US customers first to validate our product? Hard to answer the question. Need more context, Daniel. It's just like, it's hard for me to like tell you kind of how long a ball of string is. It's like there's so many variables to this one. So, my quick reaction would be if the consumer isn't there yet, then it's very expensive and hard to build the marketplace and bring the consumer there if they're not there yet. I would be surprised, given the internet penetration, like why the consumer wouldn't be there in Latin America. So that's a whole nother question. So sorry I don't have like a definitive answer for you because I just don't fully have the context. What are common challenges in LATAM that entrepreneurs need to be prepared for? Okay, another question from Robson. Yeah, I think the hardest thing in startup land is in order. Building a team, the hardest thing you're ever going to do. The team is the one that builds the company. So getting the team right, recruiting and attracting the best people, I'd say that's the hardest thing. So, in terms of how to do that properly, there's a lot of things that we could discuss on. I think that the early days, you're finding those crazy people that are like looking at your wild eyes, as you're staring at them, telling them what you're going to build and how much, passion you're bringing to this project. They're going to join because of that. I think about the first hire we ever made in Brazil. My co-founder brought on this woman from Mercado Libre, and we were interviewing her when it was not normal to like interview someone in a Starbucks because you usually go to the office. We didn't have an office, which is normal today, but and she just joined us because she was like, I just think it's going to work. Like, I just feel like you've got this energy where you're unstoppable, going back to inevitability. Right. So I think that's the first thing that I would be thinking about. And you need to, craft your pitch so that you can attract people and sell the dream and get people on board. The other kind of piece The other challenges are, I think that people underestimate the need to just be a good kind of commercial person in the beginning, connected with signing up customers. And like Andres Bilbao recently joined me on a podcast, and he was like, I can't remember exactly the way he described it, but he's like, you need five people to believe in the beginning, like 5 customers, 5 team members. And I thought that was a really cool way to describe it, because you just gotta like get those people, you gotta just sell them the vision. And, and it's like, a lot of times like irrational, like as he was describing it, Rappi, it was like kind of irrational for these people to join Rappi in the beginning, like as team members and as customers, like it didn't even make sense for them. But once you get those, you get the momentum begets momentum, and then it starts becoming a real thing. And so you've got to work hard to kind of get that momentum. Anything else? I don't know if you're looking for main differences between American or Latin American. It's not that much different. It's all hard. Regardless of where you are in the world, it's not going to be easy. So I would focus on just making it happen. Daniel Marquez, what's the most important factor for you to decide to invest in a startup today? Again, I don't spend my days looking at companies and not a full-time investor. But I think that it's, the question, I'm assuming the question is from like an early stage founder. And, I think that there's a couple things that like make me get excited. And I won't say inevitability again. What I would say is, the early traction and customer feedback is like super, important. I think the ability to have some, to bring on those key people in the beginning that like show that you're, if you can bring on really awesome people in the beginning that are willing to just kind of, join you in your journey, it's going to be hard for you to bring customers on, right? So I think that's going back to that last question of like, the challenges in the beginning. But yeah, traction is something that gets me excited. Obviously, an enormous market with a really low NPS is another thing that obviously I like. But founders that are incredible, that have demonstrated their ability to make things happen. Augusto, good question. When should a startup consider creating a board of directors? This is a good question. I think that early stage companies, you don't really need like a formal board of directors. And by the way, this is something I cover in my book as well. Viva the Entrepreneur. I talk about kind of a board and running an effective board and effective board meetings. And I would say that like having an informal board in the beginning, if you're a seed company, it's probably just like you and maybe like one angel investor, you and, you're a co-founder, maybe you're 2 co-founders, and they're just like, they're kind of check-in calls. It's not like a formal reporting. Like, I think that probably the earlier the better to like have some kind of reporting structure. But what people don't understand about boards is that they're not about reporting. When you're set up to have a board, the thing that people misunderstand, I'll tell you what I didn't understand about a board. When I raised my Series A, I had Kazek and Monashi's, joined my first board meeting. I was terrified. I was like, they're going to think I'm stupid because I don't have like a finance background. I don't have a CFO. So my numbers suck and like in how it's all presented. And I sweated it so hard the night before, stayed up all night building this Excel model. And then, because Nico Sakazi, the founder of Kazek and CFO of Mercado Libre, was going to be there. And I was scared to, look stupid. And the first thing he said was like, hey, Brian, don't worry about it. Let's get you a finance person to help you with this stuff. And so, you're not like there to kind of like sell your investors all the time. Once they're your investor, like let them know how they can help you. And you don't have to like run your board meeting like it's like you're a publicly traded company and you're reporting the status and the, where you are. It's not a status update. It's the status update comes in a deck you send before the board meeting where people can ask questions. And then at the board meeting, you're talking about growth. You're talking about the help that you need or the part of the strategy, and you're looking for input. And so just understanding the dynamics of what a board, looks like in like an early stage Series A company is important. So one, there's a good post by Mark Suster from Both Sides of the Table. Google like his perspective on boards or check out my book. I don't know if it's chapter 5 or 6. There's a bunch of stuff on board management. But to answer your question more succinctly, I would have an early investor that's an operator, ideally not a financial investor, but someone that's built a company, join you for like monthly calls where you're just like checking in and rapping about the business and sharing some of the challenges and having them be a good soundboard. What startup accelerators would you recommend in Brazil? I don't know. I don't really know that many of them. I've never worked with any of them. So I don't really know any of them. And, you know, so I can't really opine on startup accelerators in Brazil. I know there's a handful, and I think some are better than others. I would focus on startup accelerators that are run by entrepreneurs. So that would be my advice. Find one that's run by an entrepreneur, because they're probably going to be able to help you more. So that would be my advice. What do you look for in founders to select them for the program and invest in them? So I think I already covered that. What are the most common mistakes you see in founding teams in ideation stage? Any recommendations to finally go from 0 to 1? Good question. Okay. All right. There's a lot of schools of thought on ideation. And by the way, at Latitude, we're breaking our cohorts into 2. We have an ideation cohort coming up in January, and we will have a build cohort. So if you have some initial traction and you've got some customers and you've raised a little bit of money, you'll probably be more fitting for the build cohort. If you're in ideation stage, then you're obviously at the kind of the ideation cohort opportunity. In terms of mistakes, gosh, what are the biggest mistakes that I see in ideation? I don't really have any super strong thoughts that I can think of. I guess, be flexible. like the biggest mistake is to be super like rigid in your thinking, right? Because the best founders that have figured out, crack the nut on like the opportunities, a lot of times it's completely different than what they're thinking. So, don't fall in love with an idea and don't be obsessed with a category. I guess another mistake would be, I don't know if this is a mistake, but like you can focus on a niche market. So, my podcast with Shu, which is from SoftBank, it's kind of like counterintuitive because in the podcast episode, he said, focus on small markets, which I kind of like didn't get when he first said it. But what he means is like nail a small market that can be bigger, that can become bigger. So I think that advice is relevant, and focus on something that you're locked in and can build a ton of value, and then expand from there, kind of land and expand. So that would be like, get the network effects going on a small concrete idea, and then you can always expand the business over time. Let's see, man, I think that's been an hour. I'm getting tired here. Let me see if there's another couple questions. Tools to track investments. I mean, I don't know. We don't really have any great stuff there. Airtable. What do you think is the most effective channel to connect with investors in the US willing to invest in Latin America? The best channel is introductions by far. I think that the cold email is an underrated strategy. There's a few people that might be on this call that use this strategy with me and actually made it work. So when I was actively investing before, now I'm just kind of sending it to the investing team. But I think writing a really well-crafted message that shows that you research who the person is, that you know a bunch about them. My first investor I got, the investor had a blog. I read every single word of their blog, and I even like almost emulate or like mimicked their speech patterns of like the topics that they discussed. And so I built rapport by them by just really understanding them. We forget that like people are humans and they crave human connection. They crave like, like being, it doesn't matter who you are, even if you're, a superstar, you want to feel validation and you want to be heard. And that doesn't change for, even like, regardless who the person is. So I think that would be something that I think is an underrated strategy. is a really well-crafted message, but don't do what I did in the beginning. Don't send, I mean, I could pull up my LinkedIn right now and I don't want to embarrass like these people, but like, it's bad. Like, hey, Brian, first step, it's like, I got a startup and it's in Mexico and here's what we're doing. Like literally the first thing, it's kind of like walking to someone up at a party and being like, hi, just like super blunt, like, like statement, like of what are you, I don't know. I can't think of a good example of something stupid that someone would say, but like warm it up, like, like show interest. And so I would just say that the philosophy of, being at a dinner party, take the advice of, instead of trying to be interesting, be interested, right? Like that, if you have that lens, like it's amazing what happens when you're like, just like, oh, tell me about what you're doing and show interest in other people. So the same philosophy kind of applies to, crafting a really like important message to somebody that shows that you understand them or you know what they're about or that you took the time. So like do that, like, and you'll get to some US investors. Besides that, get introductions from other successful founders, Santiago. Ideally, it's hard to get intros to someone that hasn't invested in your company because the intro won't weigh as much. So if you get you get 5 amazing angel investors and they know the Casanova, a fintech investor, or Quona, or whoever, whatever, QED, and they're connected to those investors because they, invested in their last company or their current investors in their company. You could also, to a second degree that's not as effective, you could ask someone like a top-notch lawyer that works with, the best investors, not as strong as of an intro. And then remember, like all the work you do publicly, like if you're starting to be on Twitter and you've got like some really interesting, unique insights on things, that's building your personal reputation that will make you more interesting and accessible to other people. So like all the work you do externally, could be a way to kind of like build a relationship and connection with people because they can kind of see what you're doing. All right, I've got time for one more. Let's see here. I'm just going to choose one. Okay. What is the most difficult moment you had at Viva Real? What is your advice? Okay. The most difficult moment I had was in 2011. I'm sleeping in my co-founder's apartment. Some of you may have heard the story before. And so I see Matilde smiling. I was sharing a 1-bedroom with my co-founder. My wife was with me. We're sleeping on the living room, kind of makeshift bed, running out of money. The torrential rains of Sao Paulo in February. My wife, like we'd spent a month, kind of in Brazil trying to get this business going. My wife pulls me aside and says, I need to talk to you because we have no privacy because we're in a 1-bedroom apartment. We go down to the bottom, the lobby of the apartment. And I walk out and I look and see this like torrential rains, like flowing through the street. It looks like there's like garbage floating down the street because it's like massive, like just flooding in the streets. And it probably gave my wife permission to like let the tears start flying. And my wife is a super tough person, like not, like she's kind of, I like to joke that she's a iron fist wrapped in a velvet glove. So she's like really strong. And then she just kind of lost it. And she's like, what are we doing here? ¿Qué diablos estamos haciendo acá? Yo creo que dijo. And I, and it was a hard moment because it was like a true test in our relationship. We've been married for several years. And so I kind of like swallowed and like kind of got the energy up and I just like told her to trust me. And, she kind of wiped away the tears and we went back up and we made it happen. And so that was the moment where it was like really big low, struggling and, and it put a lot of pressure on my personal life. And so my advice to you would be prioritize your personal life. It's if you're in a relationship, you have to, there's a great book called Surviving and Thriving in a Relationship with an Entrepreneur by Brad Feld, who's, a great advisor and smart person on startup land. And yeah, I think that like number one, your health is the most important thing. So treat yourself really well. Make sure you have good self-talk. Like be not, think about, treat yourself how you want to, you think that the ideal of treating other people is. And if the ideal of treating other people really fairly and really with a lot of respect, and you're not treating yourself well with your own individual dialogue, you need to work on that. Once you have the oxygen mask on, you can help support your family and make sure that you've got the support there. And then you'll be ready to be a great co-founder, and you'll be ready to battle all of the challenges that you're inevitably going to face in the chaos land of building a company, which is super fun and a massive accelerant for personal growth, but is hard as hell and sometimes can be extremely frustrating and demoralizing, but it's always all worth it because your personal growth is incomparable in any other kind of channel. So with that, I'm going to wrap it up and say, hope this was a good live. Thank you for sticking in here. We had a good 60, 70 people most of the time, at least on LinkedIn, and then also a handful of people on Zoom. And so, yeah, hopefully this was useful. And if you don't already, follow Latitude on social media. If you want to start listening to the podcast, pick up the book. These are all good resources. We want to democratize more access to founders so we can build the next generation of world-class companies. Thank you.